Let's get right to the floor show. We're joined by trader Keith Fitz-Gerald, who's laddered into NVIDIA quarter after quarter, and Stephen Suttmeier, Bank of America Chief Equity Technical Strategist. Stephen, I am going to start with you. We're looking at the worst day for the Dow since March of last year. We're also looking at some pretty significant drops in the Russell 2000. To what do you attribute this sell-off that's happening right now?
Well, pretty much the Fed minute yesterday, I think, started this. And I think investors this morning, with the opening on the upside, expected NVIDIA and AI to save the market, and then PMI threw water on that. So I think it's very important to note, though, that coming into this, technicals were quite solid. And today, technicals are not. I mean, even with the market up, breadth was negative. And then it just kept getting worse and worse throughout the day. Let
me just define breadth. That is sort of the advanced decline line where the leaders sometimes, or at least lately, have not been outpacing the laggards, the decliners of all of these stocks. So what do you mean by that?
Sure.
We're looking at a chart here.
So, yeah, this advanced decline line, I don't know which one that is. Oh, yeah, it's my most active advanced decline line. Okay, so that is a U.S. most active advanced decline line, so it takes breadth and volume. So when that's going up, what's going on is more stocks are going up on high volume, and there's a bit of a divergence on that. So that is one sign that the market might struggle. But I will say, this is one negative in a slew of positives. If you look at the traditional advanced decline line, the S&P, you have more stocks going up than down. That moved to a new high prior to the S&P last week. Same with the NYSE. If you look at cumulative net up volume, I know that's a big word, it's basically the advanced decline of volume. If that goes up, that means more accumulation or buying volume in stocks versus selling volume in stocks. And we got those signals last week, too.
Yeah, but today we are looking at a sell-off. How much do you think this has to do with the Memorial Day weekend? People selling today, leaving tomorrow, gone till Tuesday.
I mean, if with a little bit of the news drama we've gotten, I think that might have something to do with it, yes.
Okay, let me bring in Keith Fitz-Gerald. Keith, you've been right on NVIDIA, but I have to say I was looking, speaking of internals, I was looking specifically at some of the laggards on the NASDAQ 100. A lot of them are chip-related or focused on chips. Everybody from ON Semiconductor, KLA, we've got Global Foundries down, Intel not looking healthy here, now down about 4%. Tell me if this is just that moment in time where people realize that it has been a bit bubblicious.
I wouldn't use the term bubblicious, but what I would say is this is the moment in time where it's become abundantly clear to anybody not paying attention that NVIDIA dominates the scene. It is clearly leading the race, and you want to get on that horse if the race continues.
So is this a buying opportunity? I mean, people who thought that AMD was too expensive, they have an opportunity now. I mean, slight. It's down just a couple of percent.
Well, not only do they have an opportunity with AMD, which I also own, NVIDIA, which I also own, they have an opportunity to correct something, which is their omission or their lack of being on board. The train is leaving the station. AI is going to power the markets for generations. You heard Jensen's comment about they are racing to keep up.
Yes.
That is like a Viking at an all-you-can-eat buffet, and any investor who is serious about their money and building a future needs to pay attention to that kind of commentary.
Let's talk about the S&P 500, Stephen. Yesterday, Liz Ann Saunders of Schwab was here. She pointed out that some of these real momentum names, Microsoft, Google, Meta, NVIDIA, SMCI even, that about 30, they're not looking so healthy.
Right. I mean, this is a mega cap market, and big long-term bull markets, which we believe we're in, are mega cap markets. In fact, we actually think that, believe it or not, a melt-up is coming for the S&P 100 relative to the S&P 500. The ingredients are there. We're not concerned so much about small caps lagging or eco-weight lagging, because that tends to happen in more bearish periods. I mean, think about 2000 into 2007. I mean, you had leadership from small caps and the eco-weight, and the market was in a bear market. So overall, we like the market. We're just seeing this as noise. I mean, we think seasonality supports a summer rally, especially in a presidential election year.
Okay, seasonality supports the summer rally. Do you agree, Keith?
Absolutely. Stephen makes a really, really sharp point here. The technicals in the market are quite different from the economic backdrop or even many of the broader stocks. Not all tech is the same. Not all these other things. Look at Boeing, for example. That stock is on tough times. So you've really got a distinguishing, need in the marketplace. You want to go where the money is going to be treated best. You want to be in line with the major themes of the marketplace. And there are still a lot of companies in those mega cap world. We agree with that sentiment. I think there's getting ready to be a melt up.
Melt up. Okay, well, right now, I wouldn't call this a meltdown because, you know, a 610-point loss, 613-point loss on the Dow is a 1.5% drop, under 1% drop for the S&P, which earlier, by the way, hit a record. Same with the NASDAQ. Give me your final thoughts, Stephen, on where investors should be going, you as a technical analyst.
We believe in growth stocks over value stocks. We believe in large caps over value, large caps over small. So we like tech, semiconductors, selected communication services. But even prior to this decline, I mean, if you're a stock picker, you can find financials that are coming out of big base patterns and can participate. You can find some industrials that are breaking out and can participate. So I think this is where portfolio managers actually can make and beat the benchmark if they can find the right stocks, because they're there. Every sector has them.
Stephen Suttmeier. Keith Fitz-Gerald, our thanks always.